Thank you all for tuning in. Now, I can't promise you the outcome that you're gonna get from watching this, but what I can tell you, if you apply what you're about to learn, this will change your financial future. If you're here, it's probably because you're ready for change. And what you're gonna learn in tonight's training will do just that. So if taking back control of your money isn't enough to keep you glued to this screen for the next 90 minutes, I think it's time to reassess your priorities. And tonight, we've got a special guest. My good friend Brian is gonna be doing the training, and here's what you can expect to learn. Number one, you're gonna learn how to take back control of your money. And you're gonna do that by learning how to be the bank. Number two, you're gonna learn how to build wealth through your own debts and expenses. And you can do that without working harder, without working longer, and without taking on any additional risk. And number three, you're gonna learn how to get all the money back for every single car you will ever buy, drive, and own. That's exactly what you're gonna learn in tonight's training, so get ready, get set, let's go.
Take back control.
Tuesday night.
Tuesday?
All right. Hey, everybody. Welcome. Now, one thing I'm going to note as we get going, so if you guys have not been on this presentation before, ask questions. So I love to respond to questions on the fly as we're going. This is an interactive presentation. It's not me just sitting here speaking. So you can use the Q&A box. You can use the chat box. You can, just message them to me privately. But yeah, definitely ask questions. That's what we're here to do. We're here to learn about this. And the best way is to, ask questions. And then we've got a lot of other people that have been on this presentation many times. Oftentimes they'll respond and give their feedback as well, based on their own personal experiences with this. So let's go ahead and get started. All right. Now, as we get into this, there's a quick question I always ask everybody, and that is, what in life should you control, right? There's mainly three things that I look at that we all really should want to control in our lives. There's, health and all that kind of stuff. Yes, but there's three main things. You guys want to use that chat box. What are like some of the things that you think, if you haven't seen the presentation before, that you think we should control or would want to control in our lives? Anybody? I know Jose knows the answer. So here's the first one. Yeah. So Steve right there, money. Exactly. So money is one of the first things that we talk about that we want to control. But if you're able to control money, what's something else that you can control? Well, that next thing that we want to control is time, right? Because, money, by the way, can come and go, but time, once it's gone, it is gone. We all have the same amount of time in a day. Once it's gone, but money can allow you to control time. But before you can control these two things, yeah, Serena, you're going to say money too? Yeah, because money can allow you to control time. But what are most of us doing? We're trading time for money, meaning that we are working for our money. Our money is not working for us. So part of what we're going to be talking about here today is that right there is, how do we get our money working for us, harder for us, so that we don't have to work so hard? Yeah, time is money. That's where that saying came from. Okay, time is money. I don't really like that saying all that much, but that's what they say, right? We trade time for money. But there's one thing that you really got to understand that you want to control before those two things. And this thing is to me is the first thing that you want to control, and that's your mindset. It's what you think. It's what your subconscious programming is, not making you do, but it's that mindset that we have, mindset around money, mindset around time, all that kind of stuff. Because if you're in a situation or doing things that you don't really want to be doing, like have a job that you don't want to be doing or trading time for money, where'd that come from? Well, it's a mindset thing in most cases. Okay. So as we go through the presentation, I want you to keep these three things in mind. There you go. All right, I want to start with this quote. This is a quote that we here at the Money Multiplier and the BYOB team here, we really like this quote. And it's by Will Rogers, and it says, "The problem in America isn't so much what people don't know, it's what people think they know that just ain't so." Now, why do I say that? Well, we've, here in the US especially, been taught a certain way around money that probably is not true. So keep an open mind as we go through this presentation, because I am going to be challenging the way that you think about money, your mindset around that stuff. Okay. Now, I want you to think about this as well. So let's just say that you have a room and you put 100 18-year-old kids into that room, and you ask all these kids, hey, where will you be at retirement at age, let's say 65? Do you think they're going to say, oh, I'm going to be broke, I'm going to be poor, I'm going to be unhappy? Of course not. They're going to say, I'm going to be successful, I'm going to be wealthy, I'm going to, be full of joy and happiness, all this kind of stuff. But here's the fact of the matter. Let's fast forward to that age, 65 at retirement. The fact of the matter is that only five out of those 118-year-old kids will be financially secure in retirement. 95% will not be. And that is kind of scary to think about that. Here in the United States, one of the wealthiest countries in the world, but only 5 out of 100 people are financially secure in retirement. Not free, by the way, just secure. And that statistic does not, so it's not something that just came out of thin air. It's actually by the Social Security Administration. They say that 5 out of 100 people will be financially secure at retirement age, 5%. So the question I want to ask you, do you want to be one of those 5%? Give me like a 1 or a Y in the chat box if you want to be one of the 5%, or an N or a no if you want to be one of the 95%. Most people are not going to say no to that. We want to be one of those 5%. That's what we want to strive to do, right? And so the concept that we're going to be talking about here today is what those 5% actually use. Lots of other things, but this is one of the strategies that you can use to be one of those 5%, right? So, all right. Now, quick, who am I? If you guys have not met me before, so, I'm Brian Fouts. So I actually went to Washington State University. So I know some of you guys know where that's at. I got a degree in construction management and business. That's the degree right there. It's gathering dust somewhere. I don't know where it's at right now, but it's gathering dust. Haven't used that thing in over 10 years now, I believe, because I became an entrepreneur and did a lot of other things and stuff. But I kind of got my start in life the hard way. A lot of you maybe can relate to this. I was, Western Washington is where I was raised, but raised lower class, great family though, all that kind of stuff. But I was kind of taught to follow that traditional path in life, right? Follow the leader. Yeah, exactly. Steve said it right there. Follow the leader when it comes to finance, right? Mom did this, you do that. Exactly, right? And so that's exactly what I did. I was doing that traditional path. Go to school, try to get good grades, right? Go to college, get a career in corporate America. And that's exactly what I did. I went and got a degree or a job in corporate America. That's part of how I traveled quite a bit in construction. I had a 401k, had the house, the mortgage, the growing family, the debts, all those kind of things. And I literally was told this, oh my gosh, you're living the American dream. And it felt to me like the American nightmare because I was not happy. I was not doing the things that really truly brought me joy at all in life. And I felt like I was drowning. And it just something was always felt off to me. And this is kind of a story you may have heard before, but I was in a doctor's office and I had this magazine I picked up, and it was a financial magazine on something. I don't remember anymore, but I opened it up and it had this article talking about millionaires. And it said that the average millionaire knows their net worth, everybody else doesn't. And I'm like, uh-oh, because I didn't know what mine was. And so obviously I was not part of that group. And so I went home and did the math and found out my net worth. And it was a negative amount of money after being 10 years in corporate America. And I did the math even more. And if I looked forward, I was actually going to be digging a bigger and bigger hole. And then of course, the 08 and 9 hit and lost all this money. I mean, it was like crazy. So I knew something had to change. And it was kind of one of like, what the heck or what the F moments, for me. But I also had a personal experience, and I'll share this personal experience because it had a big impact on my life. So I had my grandfather. He was my idol. Everybody loved this guy. He was a coach at North Thurston High School. Some of you might know where that's at. But he coached my brother. He coached his own son, my dad. He was a coach, and obviously, and he was working so hard to retire. He wanted to work hard. He wanted to retire though, and he wanted to travel across the West Coast to sporting events, and he did that. He retired in his 60s, bought a motorhome with his wife, my grandmother, and they traveled for about a year and a half. And then he got sick. He got real sick. He ended up getting leukemia, kidneys failed, and Parkinson's, and then he passed away. And like the basically 90% of his retirement was stuck in a chair or in a hospital bed. And I was like, man, that is horrible. He worked all these times to go do that. And so it really made me want to do something different. That's really what that whole, experience kind of told me is, do you want to live your life now or wait for down the road? So I left that job, left that career, started, learning about business, entrepreneurship. This is one of my businesses because anybody can say anything right on the internet, but this is one of my businesses. I acquired it in 2016, and in 2021, in the middle of COVID, by the way, it did a little over 2 million in revenue. So, but part of what we're going to be talking about here today is how I did that. So part of the strategy that we're talking about here today led me to doing this kind of stuff with my life. So it can have a massive impact, but I had to change my mindset. Big part of it was changing my mindset. And that's really led me to actually having experiences. Because remember, my grandfather, he was waiting to do those things in life, but I want to do them now. So that's what I ended up doing. I had a lot of fun experiences. I like to control time. You guys can't tell. Money's not my big thing. Time is my biggest thing I want to control because I love to have experiences. I control my time. And so you guys may have seen me doing this presentation in a motorhome while traveling with my family, to the Grand Canyon. I've done it in, probably, I think 8 different states. I've done the same presentation. So, but that's what led me to doing this kind of stuff, and also speaking on stage about this strategy to high net worth individuals, some billionaires, and going through this concept with them and finding out that they're all using it. So, I had a lot of fun experiences. So, just kind of quick thing about me. Now, one thing I want to share with you is this is not a new concept. What we're talking about here today, it's not new. It's been around for a long time. We're talking about hundreds of years. Okay. So who talks about this? Well, have you ever heard of Robert Kiyosaki, Rich Dad, Poor Dad? So in fact, I know his advisors personally. I've worked with about 4 or 5 of them personally, one-on-one. And one of them was my mentor in infinite banking, the thing we're going to be talking about here today. But Robert talks about it in his book, Second Chance. When I first read that book, I saw this inside there. I was like, what is he talking about? This sounds really too good to be true. And at that point, I didn't know what it was. And then I learned about it. I was like, oh my gosh, that's what he's talking about. I've been to many Tony Robbins events, Business Mastery, Unleash the Power. But in his book, which I recommend these books, by the way, Money Master the Game, he does talk about this concept, this strategy inside there. And then, of course, you've got Becoming Your Own Banker, Unlock the Infinite Banking Concept by R. Nelson Nash. He's the one that popularized this concept back in the, the 80s, 90s, and 2000s. All of us here, we all have this book. Here's my copy right here. It's a great book. I definitely recommend that one, but it really dives into the technical side of the concept. And then additionally, we've got Mapping Out the Millionaire Mystery. So one of my mentors and friends, Chris Naugle, and then of course Brent Kessler, they wrote that book. I definitely recommend that one. And then the Private Money Guide, Chris wrote this one around how to use this concept by being a private lender. By the way, if you want those bottom 2, I have them in PDF form. So here in a little bit in the presentation, I'll put in my email address or my link. By the way, there's nothing to buy on this presentation. We're not selling anything, okay? I just want to make sure you guys get this knowledge, and then if you want to chat about it, we can. But I'll give my email, and you can email me, and I'll send you those things via PDF, those bottom 2 books. All right. Okay, so the next thing I want to mention is who has used this strategy throughout history. So it has been used. So Jim Harbaugh, he was one of the top paid coaches, football coaches, college, and he was paid through this concept. So the college actually paid him deferred compensation, they call it, through cash value policies. So it's pretty cool how that went down, and it was publicized. This guy, he probably doesn't know who he is anymore, but poor Joe Biden. But he has 4 of these policies, by the way. He disclosed that, right? And he had 6 of them. I think he has 6 of these things. So these are people that are using this. Walt Disney. So Walt Disney, if you understand how he got Disneyland started, no bank would give him financing. I mean, he went to bank after bank after bank, and they all denied him. But he had this strategy. So he ended up using this as his own banking system to fund the start of Disneyland. So we wouldn't have Disneyland as we know it today without this concept. Kind of cool. Ray Kroc. So when he took over, or I guess I want to say partnered with the McDonald's brothers, but ended up taking it over, he used this policy to fund the growth of McDonald's for the first 8 years, things like salaries, employees, things like that, to grow the business. So we wouldn't have McDonald's as we know it today without this strategy. And then Pampered Chef, so she did the same thing, started Pampered Chef, and of course that got acquired by Buffett for a very large sum of money, billions, which is crazy. And then of course wealthy families had been using this for generations. JP's, Morgan's, Chase's, the Vanderbilts, especially the Rockefellers. There's a great book on that one out there. The Harrises, and of course a lot of families. And we have over, I think, like 20,000 clients that have done this. So yeah, so it can be used in many, many different ways. Now, what I want you to understand though is what will infinite banking do for you? Okay. Yeah. I like how Shane said, yeah, Money Master the Game was like a foreign language for me the first time I listened to it. But yeah, it does take some time. That's a great book. He has 2 of them. I can't remember the first one, or that's the second one. But man, they're good books. But yeah, you got to sort of kind of go through them a couple of times, for me at least, to understand them. All right, so what will infinite banking do for you? So these are the things that it does. I want you to really understand this. So 1, it creates guaranteed, I love the word guaranteed, by the way, but it creates guaranteed generational wealth day 1, not year 40, but day 1, guaranteed, tax-free, by the way, generational wealth, which is an amazing concept. This is why a lot of wealthy families use it. Okay, it allows your money to grow uninterrupted, compounded for the rest of your life with guarantees. Once again, I love that word guaranteed, but uninterrupted compounding, I don't know anywhere else that exists, by the way, except in this concept. Really, truly, I have not seen anywhere else where it does the same thing it does here. But uninterrupted compounding is extremely powerful. It takes control of your money away from the big banks, away from Wall Street, away from corporate America, by the way, and puts that control into your hands. Remember at the very beginning, we talked about control of what? Time and money. This takes that control away from them and puts the control of your money into your hands. Okay. It protects your money from lawsuits, from divorce, from court orders, bankruptcies, things like that in most states. So it protects your money, right? If you're going to work hard for your money, you want to protect it as well. So that does that. And then it allows you to be the bank. This is obviously the core of what it does. It allows you to be the bank for things you may normally use a bank for. So think of things like real estate, investing, college, homes, investments, retirement. But here's the cool thing. It does that while still doing all of the things above. Not one or the other, but all of these things at the exact same time. So give me a one, give me a yes in the chat box if you'd like to have all of these things in your life. Not just one or the other, one or two of them, but all of them at the exact same time. Would that help you? Would it be more beneficial? Would it allow you to build wealth faster? Yes. Shane says yes. So all of these things at the exact same time, not just one or the other. Okay. That's why we say it does all of these things and grows your money. Okay. Yeah. So Steve, he said, walk an example of us through an infinite banking circle process with an investment. So I'll give you an example. You have this in place. You borrow from this, right? You go put it into an investment that cash flows, let's say 12%. That's pretty common in the hard money, 12 to 14% or 15%. That cash flows back to you. So now your money is in the policy, earning you dividends and growing, and you have that money in an investment. Not one or the other, but both places at the exact same time, and you control all aspects of that strategy. So it's a circle. So policy to investment, from investment back to policy, there's your circle. Pretty simple. But we'll go through some examples of that. You kind of see how it works. All right. So as I said at the beginning, guys, ask questions, use the Q&A box, use the chat box, ask questions. That's what this presentation is for. All right. So who learns quickly, right? Kids learn very quickly. So what am I showing you here? So this is called the backwards bicycle. Now, when you were a kid, or at least when I was a kid, I learned how to ride a bicycle. It was pretty, it took me a while, but once I learned how to ride it, I haven't forgotten how to ride that bicycle. I can hop on, pedal, goes forwards. I can turn the handlebars to the left. It goes to the left. Now, what if it was a backwards bicycle? Now you can go Google this after the presentation, of course, but it's called the backwards bicycle. And when you hop on that bike and you turn the handlebars to the left, the tire goes to the right. And the video is hilarious because the guy that gets on it, he immediately falls over because he's trying to ride it like the traditional bicycle, but it's a backwards bicycle. So it takes him, quite a bit of time to learn how to ride the backwards bicycle because it's not ingrained into him on how to ride that one. But once he learns how to ride it, then he can ride the backwards bicycle. Now, what happens when that gentleman tries to go ride a regular bicycle? He falls over again. So why am I saying this? So think of money. Think of, investing money. Think of controlling money like the backwards bicycle. We are taught a certain way around money that might not be correct. Now, as we go through this presentation, keep that open mind, okay? Because now once you learn how money really works, the backwards bicycle, it's going to be very hard to go back to that traditional way of thinking about money. So once again, it's an analogy, kind of keep an open mind, but very funny video if you want to go look it up. All right, so real quick, why aren't more people successful around, money? Okay, so this is the mysteries of money. So really quickly, what are the wealth killers? Taxes? Like, I don't mind paying taxes, but I'm a lot happier paying a lot less, right? Inflation. What is inflation? Inflating of the money supply. What causes inflation? The Federal Reserve printing money and fractional reserve banking, which is our banking system, okay, which causes eventually rising prices. Volatility kills wealth. Interest really sucks a lot of money away. And we're going to talk about that, by the way. Mindset's a huge one, by the way. As I said, that's one of the three things that we want to control, okay? So following the status quo, fear, life, just in general, what we're taught, those all affect our mindset, which then affects our way we think about money. Okay. And Shane, great for, thanks for sharing that. Yeah, definitely. Okay. All right. So the mysteries of money. So really quickly, what is the definition of money? It's just a means of exchange. It's nothing more than that. It could be seashells, it could be dollars, fiat currency, and currently what we do, but that's just what money is. Now, what company uses compound interest? Most people say banks use compound interest. No, they don't actually. They charge you interest, but they don't use compound interest the way that we are talking about it, okay? Are your dollars worth more today or in the future? So that's an interesting question. Think about that. If you have a dollar bill 20 years ago, how many candy bars could you buy? Maybe 2, right? How many can you buy today? maybe half of a candy bar, right? So your dollars are worth more today than they are down the road. So keep that in mind as we go through this. Will taxes go up or down? I know that's kind of a general joke kind of a question, but yes, of course, taxes typically go up, they don't come down. So keep that in mind for a second here. Would you wait to eat bread or drink milk? Okay. So what I mean by that is, would you go and buy like a loaf of bread, put it into your freezer, and then 5 years down the road, maybe you got, 2 loaves of bread that are inside there now because it multiplied, but they're all freezer burned. No, you wouldn't do that. Okay. Would you drink milk, today or 5 years down the road? No, of course. Would you go buy a car, park it in your garage, and then drive it 5 years later? No, of course, you're going to use it today. Okay. So here's what I mean by that. So what do you know about your retirement account? So a retirement account, like a traditional 401k or something like that, you put your money in there today and you can't use it. You can't use it until down the road. So we're doing something with our money that we would not do with something that money buys: food, a car, things like that. Another example is like, let's say you're a farmer. This is a good question here to think about. You're a farmer. You're going to go pay $5,000 for some seed, some grain, right? You're going to plant that. And then 6 months later, potentially, you're going to harvest it for $50,000. Would you rather pay interest or taxes, not interest, taxes on the grain or the harvest? So think about that for a second. Would you rather pay the taxes on the grain or the harvest? Well, most people would say the harvest or the seed, right? The grain. But yet we don't do that with our money. We put our money into vehicles that do the exact opposite of that. Make sense? And so with infinite banking, we're actually paying taxes on the seed, not the harvest. Okay, so just kind of something to keep in mind. All right. One last thing I want to show you here is how does our money flow? So this is, now when you start to think about becoming our own bank, our banking system, we have to understand how money flows. All right. So as an example, let's say that you're going to go buy a car, and let's say that car is $25,000. Doesn't matter what kind of car. If it's a Maserati, maybe it's one tire, right? But let's just say you're going to go buy a car for $25,000. And let's say that you happen to have $25,000 in cash at your local bank, okay? And maybe that $25,000 in that bank is earning, let's say 4%. Okay, you're earning 4% on that $25,000. And you go to the bank, Mr. Banker, and you say, Banker Bob, whatever his name is, I want to take out $25,000 to go buy this car over here. But the banker says, well, wait a second there, Brian. Before you do that, what if I did something for you? Rather than taking that money out of the bank and paying cash for the car, what if I give you a loan with the cash as collateral? So now your $25,000 is earning the 4%, but I'll give you a loan at 6% for 60 months. That's a typical 5-year note, okay? Does that make sense? Okay. So, because in this scenario, you might say, well, Brian, but he's paying back on the loan. But if he took the $25,000 out in cash, would he not put savings or money from his cash, his income, into the savings account to build it back up again? Yes. So the cash flow is no different on this example here. Now, how does this work? Does this make sense? Okay. The monthly payment on the car note, the loan, is $483 per month. Okay. That means that over the 5 years or 60 months, he's going to pay $28,999. But what has the money in the bank account done? Well, guess what? It's earning 4%, and the future value 5 years down the road is $30,525, meaning that, guess what? You've actually made essentially $1,526. Now, this is obviously a very simplified example, but I want you to understand this. You can actually make money while earning 4% and paying 6%. Why is that? The 4% is compounding on a larger balance every month, every year. Whereas on the other side, you're actually paying 6% on a decreasing balance. That's how interest works. Now, here's the thing. In this example, the bank is in control. The bank controls your cash in the bank account, and it controls the loan. So all we're talking about when we talk about the infinite banking concept is you control all aspects of everything you see here on the screen, and you benefit because you are the bank. Okay. All right. So what we're going to be talking about in moving forward here is, one is the machine. What is the machine that makes this work? Then we're going to be talking about the marathon, because this is a marathon, not a sprint, right? If we want to build wealth and be financially free, it's a marathon. And the last thing, of course, is everybody's favorite topic, the millionaire. How do you build wealth with this strategy? All right. So let's talk about the machine. What is the machine? So what I want you to think about is like this, okay? So the machine is nothing more than a permanent dividend paying whole life insurance policy with a mutual insurance company specially designed for this strategy. Now you might be saying, well, Brian, well, why a life insurance? So I want you to think about this. Think of infinite banking concept as a car. What does a car have? Wheels, tires, brakes, windshield, hopefully windshield wipers, a radio, steering wheel, seats, has all those kinds of things. But if that car has no engine, can it function? Can it go down the road? No, it cannot. It has to have an engine. The engine is the life insurance policy. Now, how often do you look at your engine in your car? Not very often, because you're busy driving it. So yes, there is going to be this kind of policy that's built for this strategy, but its purpose is to allow the infinite banking concept, the car, to function and go down the road. Okay, so just keep that in mind. Now, you might be saying, well, Brian, but why life insurance? Who else does this? Well, lots of people do, but this is kind of funny to understand. Bank-owned life insurance, BOLI. Banks, traditional banks, the ones you see on every corner, are some of the biggest buyers of whole life insurance policies. Why is that? Do they know something that we don't? Probably, but banks own, and you can look it up, by the way, online, you can go Google it. They own more whole life insurance than they do their buildings and real estate combined. So guess what? We're just doing something the banks are already doing with our own money. Okay. All right. So let's look at where our money goes. So remember, I'm not going to go through the example again, but we just showed you how we can make money earning 4% while paying 6%. Okay. So once again, keep that in mind as we go through this, that this is what we're doing. We're controlling all aspects of the banking functions in our lives. Now, to understand how to become your own bank, you've got to understand how banks move money. So this is what they do. So let's say you take $100,000 and you deposit that into your bank, okay? Your local bank. And let's say they're going to pay you 4%. Now, if the bank is going to pay you 4%, is that a liability or an asset to the bank? It's a liability, right? Because they're paying you 4% on your money and they owe you the $100,000 plus the 4%. It's a liability, but they don't sit on your money. They don't just put it in the vault and say, okay, let's look at it. They put it into motion. What do? They lend it out, maybe on a home mortgage or something like that, right? But what's the seller of the home do? Well, the seller puts the money right back into a bank again, but they don't sit on it once again. They put it back into motion. Maybe it's on a car loan, maybe at 8%. What's the dealer do? Puts it right back into a bank again. What's the bank do? It's the same thing they've been doing. Maybe it's a home remodel, maybe a HELOC, something like that. But what's the contractor do? What do the subcontractors do? Put it right back into the bank again. Okay. What's the bank do? Puts it back into motion. Maybe it's on a debt consolidation, maybe something like that. But what's the credit card company do? Right back into the bank. So essentially what's going on here is the bank is paying you 4%, right? 4%, but how much are they making on that money? 500% more than they're paying you, because they're making around 20% on your money while paying you 4%. That's 500% more than they're paying you on your own money. This is how banks function. Money in motion, right? They keep that money moving and they make money off of it. And you can actually go look this up, by the way. It's actually BauerFinancial.com. You can go look it up, and you can actually look history too, on the history of how banks have made money. But they make between 400 and 1,300% on the money that you leave in the bank's account, right? That's incredible. So banks are making a lot of money off of your money that you leave sitting there. So why not be the bank? Okay. Now, to understand why being the bank makes sense, we've also got to look at your annual pattern of spending. Now, this changes over time, of course, but this is generally speaking how the average family spends their money. So let's just say $1 comes into your household. Okay. So 20 cents of every dollar goes to automobiles, gas, payments, upkeep, tires, that kind of stuff, right? Next, housing. So 30 cents of every dollar goes to housing. Now think of like, mortgage or rent, even upkeep on that, okay? Then 40 cents of every dollar goes to everything else, food, entertainment, travel, that kind of stuff, right? And the last little bit is savings. That's about 10% or 10 cents of every dollar. So if you look at this, automobiles, housing, and everything else, that's 90 cents. 90 cents of your money goes to somebody else. 10% savings is you. Now, is it 10%? I mean, before COVID, it was, I think, a negative number. During COVID, it was actually a bit higher. And then after the COVID, it actually has gone back down again. So that's a fluctuating number. Now, What would happen if we actually recaptured that interest? Because a financial advisor, by the way, they're going to talk to you about your savings number. We're going to talk to you about the interest that we're spending, because that is really where we're losing value. So what would happen if we captured that interest back? So let's say we have 10% going to savings, but now we're going to capture the interest from everything else. Okay. So in automobiles, right, 20 cents of every dollar goes to automobiles, but of that 20 cents, 5 cents or 5% of it is going to interest. So let's take that 5% or 5 cents and put it back into savings. Okay, with housing, it's actually 25 cents of every 30 cents because of amortized mortgages. So what if we captured that interest back into savings? Okay, our savings is now going up. And then everything else, as I said, 40 cents of that goes to everything else, but around that, about 5 cents is interest. So let's recapture that. So what we're doing is we're talking about how do we, when we become our own bank, how do we change our pattern of spending money?
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up.
Okay, so now let's talk about, let's get into some real life examples here, okay? So let's look at the car example. Now this could be a car, it could be investing, but let's just use an example of a car. And I'm gonna use a very simplified example, okay? And obviously I love cars. I have a 67 Mercury Cougar that I drive. Don't drive it much now because I live in Idaho, because I can't drive it for very many months out of the year, but I love cars. So let's look at how you can use infinite banking with cars, because we've all bought cars. All right, so what you're going to see on the screen here on the right-hand side is what's called an illustration or a tabular detail for an infinite banking policy. Now, you're going to hear me say things like premium deposits. Now, when you think of like insurance, like a car insurance or home insurance or renter's insurance, we think of we got an expense or a bill or a premium we have to pay. With infinite banking, we call those deposits because you can actually use that money. It's not just gone, it's now you control it. You can use the majority of that money to be your own banking system. So we're going to talk about deposits, okay? Additionally, when people think about life insurance, they say, oh, I'm too old or that kind of stuff. So age doesn't really matter. Yes, it does matter to a point, but you can always do policies on multiple people. It does not have to be on you. But my oldest client, I think, was in their 70s, mid 70s. So this is a very versatile strategy, but I have another couple that I just talked to here a bit ago. We're doing policies on their adult kids, that kind of stuff. So age is really not really the biggest thing. And the last thing I'll mention is that we don't focus on the death benefit. It is a benefit, but it's not what the purpose of infinite banking. It is a side benefit that we do want to make sure we are aware of, but the focus is on living benefits. So these policies have living benefits, meaning that you can use the money inside of it to go do things. So we're going to talk through how that works. All right. So in this example, we're going to go do a policy, and this is just an example. The numbers are going to be up to you and your situation. In this example, we're going to deposit $10,000 a year into the policy. That could be done monthly. It could be done, quarterly, could be done, annually. Okay. Right. But we're going to say $10,000. All right. Now, when you're doing that, you're going to build up what is called cash value in the account. Okay. So you can see the numbers on the right-hand side. Now, in year 3, we're going to go and we're going to borrow from our own banking system, our own strategy, our own infinite banking concept policy, $25,000. Now, when you do that, that's a guaranteed loan and it's cash. It's just cash. So we're going to go buy that car with cash. Okay. Now, we're going to all pay ourselves back because we want to be a responsible banker. We're going to pay ourselves back. Let's just use an example of $500 per month and a 5-year note. That's $6,000 per year. Make sense? Okay. So we borrowed from our own banking system. That's cash in hand, bought the car. Now we're going to pay back our banking system at $6,000 per year, $500 per month. Okay. So how much have we put into this now? Well, we put in $70,000 of deposits. We've also put in $30,000 in loans. So that's $100,000 that we have put into our banking system. Okay. Now, we also, though, took out $25,000 of cash. Now, in this example, we went and bought a car, but you could have paid down debt. You could have put that into real estate. You could have done paid for college, maybe a private loan. You could do anything with that because it is cash. But in this example, we'll use a car. Okay. So knowing these numbers, that means that we have put in $75,000 into this policy, but we still control 91 cents of every dollar that we have put in so far. So we control that money. We still have that money available. Now, let's look at the next set of years. Now, in years 8 through 12, we're not going to put any more deposits into the policy. That's an optional thing, by the way. You don't have to keep funding this forever, right? It's a certain period of time if you want. So no more money goes in. But here's the thing. Because of the way these policies are designed, the cash value continues to grow. It's always going up. Okay. So as you can see on the right-hand side, cash value is going up every single year, but you're not putting anything into this thing, but it's growing. So in year 8, we say, hey, let's go buy a second car. Maybe we crash the first one or we sell that one. Let's go buy a second car. Same scenario. $25,000 comes out as cash. We pay our banking system back at $500 per month, $6,000 per year. So at the end of that, we have put in $30,000 in the loan, but we had $25,000 of cash that we took out. So in reality, we only put in $5,000. But if you look from year 7 to year 12, the cash value grew by $23,592, and you only put in $5,000. Is that a good return on your money? I would think it's a pretty good return on your money right there, right? Okay. So now let's look at this even a bit further. So if you look at these 12 years, how much money have you put into this policy? Well, in the first 7 years, $75,000. In the other following years, $5,000. So $80,000, right? Makes sense? What's the cash that you have available to use for the rest of your life? It's always growing, by the way. In year 12, it's $91,000. Do the math. You put in 80, you have 91,000 available to go use and do whatever you want with, and you have 2 cars that are paid that you own outright. That is how this can work. This is a very simplified example, of course, but that is how it can work with paying a car. So rule 1, fund your policy, right? You deposit and capitalize your account. Rule 2 is be a responsible banker. When you borrow loans, pay it back, okay? And rule 3, cash value. Put that money to work. Keep that money in motion. Yeah, I love that, Steve. Awesome. Yeah. Okay, once again, pay yourself first, pay yourself back, be a responsible banker, and recycle and recapture your money, okay? Kind of the 3 rules that we follow when it comes to infinite banking. Now, this works for a car. What is something else that this does work for, okay? So, debts. So when you think about debts, debts are one of those things that suck a lot of wealth away. So how can infinite banking help with that? Because if you want to build wealth, a lot of people say, I'm going to go take some money and invest it, but they've got a bunch of debt. In reality, getting rid of the debts first, which now means that money is not going out the door, but coming back in, now you can actually put that money to work for you. So one of the more popular things that we do for our clients, and we'll show you how to do this, is paying off debt. So in this example, we have a doctor. Okay, the doctor is 45 years old approximately. I think he's a chiropractor, and he's got 9 third-party debts totaling $478,000 and change. And that's the payments are almost $6,000 per month, about $5,777 per month, and $69,000 per year if you annualize it. I mean, it's crazy how much this person is paying out. Okay, and I've had clients that are in this very close to this situation. Okay, all right. So if he paid all these things back as scheduled, that would take him 19 years. That's a long time, by the way, 19 years. So let's look at how this would function with infinite banking. Okay, so in year 1, okay, he's paying $5,777, okay? So he's going to start a policy. Now, you might say, well, Brian, but where's the $25,000 coming from? He's doing an annual premium, by the way, annual premium. Where's that $25,000 come from? Well, this doctor had money going into 401ks and not HSA. Is it HSA? Yeah, health savings account. Yeah, HSA accounts and some other things like that. And all he did was, and savings, he took that money from some of that money and redirected that money into infinite banking. So his cash flow didn't change, by the way. Like he already had that money coming in. It was just going to this bucket. And now he took that $25,000 and put it into the infinite banking bucket. Make sense? Okay. All right. So immediately within 30 days, he turns around and borrows out around $14,800. Now, one thing I want to keep in mind, this is an old kind of version of a policy. We make them more efficient. So this is a very conservative approach to this. In reality, the ones that we build nowadays are a lot more efficient and have even faster results. But we'll stick with this one because it's what I want to make sure that we are conservative with the numbers. So he borrows from that $14,000, his own banking strategy. He pays off the Discover card, Lowe's card, and part of the endorsement card. His debt drops down. His payments drop down by $448 per month. Now, that's year 1, okay? And during the rest of the year, he's paying the debts like he was already scheduled to do, okay? Now, In year 2, another 25 goes in. The cash value that he now has available is $16,571. And the $448 that he was not paying to the debts now, he recaptured that. Okay. That is payment back to himself now. That totals $5,374. So the total cash that he has available to leverage is now $21,945. He borrows that out, pays off a Nordstrom card, Wells Fargo, private loan, BMW. Okay. Debt drops down to 378, and the monthly payments have now been reduced by $1,917. Okay. So year 3, same thing. 25 goes in, cash value jumps up by $25,000. The payments of $1,917 back to himself now, because he's recapturing that money, is $23,000 and change. Okay. So now he borrows $48,000 and change and wipes out the BMW, West Marine, and part of the condo. Okay. His debts have dropped down to $283 or $83,000, and the monthly payments have been reduced by $3,677. Okay. And this is just in year 3, by the way. Okay. Now, what I want you to understand though is what happened. Okay. What's happening here? So we put in $25,000 times 3, $75,000. We've taken out $55,000 of loans approximately. So how much is left in the policy? Now, most of you know the answer to this. It's not $20,000. You essentially still have $75,000 in the policy. You're still earning dividends on a larger amount than what you've taken out. That money's still working for you. You're still getting dividends coming into the whole policy, even though you've borrowed against it. So you're compounding uninterrupted, even though you leverage that cash value. Okay. So just want to keep that in mind. All right, let's go to year 4. Once again, same thing. 25 goes in, cash value goes up by $26,000. Payments back to himself of the $3,677 is now $44,000 and change. So the total cash he has available is $70,000 and change. Same thing. We borrow that out, pay off part of the condo. Now the debt drops, but the monthly payments don't reduce because of the amortized mortgage on the condo and the loan. So nothing changes. Okay. Yeah, Laura, you can definitely come back and watch. Yeah, this is being recorded. Okay. So year 5, same thing. 25 goes in, cash value, and you can see it's compounding. So now he's getting more growth out of the policy than he's even putting in. And that'll be for the rest of his life. Okay. So cash value of 27, payments back to himself is 44,000 and change. So the total cash he now has access to is $71,225. Now he wipes out the condo and the majority of, or a big chunk of the house. Now the only debt left is the house. The monthly payments have been reduced by $4,556. So year 6, pretty simple. So in year 6, this gentleman says, hey, my policy is very efficient. Well, and I got more cash now because maybe I got a raise. Okay. So what happens is that he reduces the premium on the first policy, okay, down to $10,000. Okay. And he opens up a second policy. Now, what I want you to note here on the screen, you'll see that there's a deposit of $10,000. Below that is the cash value growth in that year. It's $13,000. He put in 10, has access to 13. Okay. That's what happens as these things start to compound. And then, of course, the second policy, he puts in his first deposit of 25 and has access to around $14,863 of cash value. So the payments back to himself equal $54,000, which means he has $82,000 of cash value available. But guess what? He only has $76,000 on the house. So what's he do? Borrows enough to pay off the house. And now all of his debts are gone. It's year 6. His debts are all gone. And he now has $5,777 of cash flow that he can now use to, in year 7, put back into the policy, pays down the loan in his own policy. And now he has multiple 6 figures in the policy and no debt. And now he can start building wealth, getting assets, investing that money, and really starting to, build that wealth for him and his family. So that flipped from 19 years to 7 years. All the debts are gone, and he has all that wealth inside the policy, all that cash inside the policy to use. So that's how this can work. Once again, that's obviously a simplified version. But if you're saying, well, Brian, how the heck do I do that? That was a lot of numbers, and you went through it pretty fast. We actually map it out for you. It's called the Debt Blaster. It's a software that we built to actually do exactly what I just showed you. It'll show you monthly or annually how to do what I just explained really quickly. So in this example, this person right here, this example, in this person, they would have paid 65,000 of interest, and with infinite banking, they'll pay, let's see here, 11,000 of interest. So it definitely changes the numbers quite a bit. Now, it's going to be different for everybody, but this is a tool that we actually use to show you how to do that. Okay. And that's what we call our implementation team or mapping team. So we help you use the policy correctly. So if you're saying, hey, how do I use this vehicle, this infinite banking vehicle? We show you how to do it. Okay. Okay, so any questions, by the way, so far? Go ahead and put those in the chat box, put them in the Q&A box, that kind of stuff. Laura, as I said, yes, we do record this so you can watch that. And then Steve, the mech is what we want to avoid. Correct. Yes, we don't ever want to build a mech, and we don't build those. But yeah, we can walk through with that number, but you don't really have to worry about it. That's kind of my job, is to worry about the mech to avoid it. Cam says, do we receive a copy of our software if we started a policy with you? Well, it's a proprietary software. It's not something we can like give out, but we will hop on a call with you and run through the numbers, and then we can update it and modify it however you want. But yeah. So we use it with you, but it's a proprietary software that we actually we built, and then the way that we put the information into there is all customized. So it's customized for every client. So yeah. All right. So now let's get into the kind of the wealth building aspect of infinite banking. So what if I have no bad debt? So I have a lot of clients that don't have any debt, or they don't want to buy cars, or so they're saying, oh, how can I still use this? And should I still become my own banker? Well, yes, because once you get rid of the debts, you don't need a car. That's when things get really fun, and you start to really build wealth and start to build that legacy, that kind of stuff. Yeah. Elizabeth, yes, of course. Yep, I can send that over to you. And I have other recordings. I've done this presentation many times, so I can send you a one if you want it right away. I'll put my email address in here in just a moment, and you can just send me an email. I can send you another recording really quick. So how else can you use infinite banking? So these are ways that my clients use this. So active real estate investors, wholesalers, flippers. I've done all these strategies, by the way. Commercial properties. So think of like apartments or mobile homes, things like that. Passive real estate, so lending private funds, being a bank to another investor. Is that what you're doing there? I love it. A lot of business owners. So I have a lot of clients that are business owners, or they're doing business, and they use this for like a retirement vehicle or a savings vehicle. Very, very common. Stocks and options traders. I have some people that are doing that. And then startups. So a lot of startup people that are trying to start up their own business, and then even equipment flipping. Yeah, Faith. Yeah, same thing. But yeah, equipment flipping is something that one of our kind of partners does, where you can buy a forklift, renovate it, and then resell it. It's just like flipping a property or things like that. So lots of ways to use this. Of course, the other ways are, for like, college education for your kids. A lot of people would rather put it into this because you don't lose the value of it down the road. Yeah, lots of things like that. Okay. So what I want to show you right now is an example of using this strategy, this system for private lending or private money lending, because if you're a real estate investor, you may have done that before, but here we go. All right, got my laser pointer up. All right. So in this example, what you're going to see here, so the columns that we focus on is right here. So this is the funding this person is putting into the policy. So you can see that this number is high in that first year. These are all end of year numbers, by the way. So this person is putting in a $50,000 premium per year. Now, keep it in mind, this is just an example. Your numbers are your numbers, okay? It could be 5,000 per year, could be 3,000, could be 100,000. It's your numbers, all right? They're also putting in $100,000 upfront. That's called a dump in. We call those a dump in, and that overfunds the policy early on to get more cash value very quick. You'll see here, and we look at the cash value on the right-hand side, not the left-hand side, but the right-hand side. They have 132,000 of cash value available at the end of that first year. Now they can borrow within 30 days, but it'll be like a slightly smaller number, and then you'll see dividends coming in, all that kind of stuff. All right, now what I want to show you is how powerful this is over time. So let's look at an example of year 8. Okay, in year 8, the policy cash value increases by $66,722. Okay, that's how much it grew by. Make sense? Yet the cash injected was only $48,593. So look at the difference. You put in 48 and it goes up by 66. Okay, that's a 37% cash on cash return in the growth of the policy. Okay, that's pretty good. Give me a 1, give me a yes in the chat box. Who wants to have a 37% cash on cash return? Anybody? Of course, Shane does. He's experiencing this. He's doing it. Anybody else? Every day. Yeah, exactly, Patrick. Yeah. So that's a pretty good cash on cash return. But does it get better? Absolutely. Okay. So let's say that you use that cash, or the 66,000 or the 531 right here. That's how much you have access to. and you private lend that money out. Okay. And let's just say that your own bank is going to be charging 5% on that money. So you lend it out at 12%. You're already making 37%. You're paying yourself back at 5%. That's a 44% cash on cash return. That's pretty darn good, I would say, right? So we did nothing different though in this situation, except for where the money goes first. So this money, they could have put into a savings account, private lent it out at 12% and made 12%. Okay. But they put it through the policy first. And yes, I'm looking at 8 years down the road because the numbers get better and better over time. Yes. So the question is, would you rather be 12% or make 12% or make 44%? Well, 44% is a pretty good number, right? And so be your own banker. This is what is possible. So this is what it means by being your own banker and putting your money to work. Okay. Very, very cool. Now, real quick, I've mentioned, compounded interest, but uninterrupted compounding. So look at this policy right here. So this is and by the way, I'm using non-guaranteed numbers. We usually use we're using non-guaranteed numbers because that's the higher number. That is what they paid every year. But what you'll see here is all these numbers. So they put in $50,000 lump sum upfront and around $6,000 per year. Okay. And they continue doing that throughout the year. So you'll see years 2, 5, 10, 15, and 20. But look at the cash on cash returns year over year, 21%, 26, 54, 115, and access to capital, 121, 126, 154, etc. That is uninterrupted compounding. And what do I mean by that? If you borrow from this policy as your own bank and go do something else over here, let's say it's real estate investing or paying down debt, nothing on this page right here changes. The returns are still the same. The cash on cash is the same. The growth is still the same. No matter what you do when you borrow from that policy or not, the growth still is the same. Steve, no, there's not. It depends on what you mean by penalties, but there's no penalty on the first year dump. And no, there's no penalties. No penalties. I mean, and we'll go through some of the numbers on the math on it, but yeah, I mean, you access around 90% of it within 30 days. So, all right. So the question is, how do you become a millionaire? How do you build those wealth? Well, it's the same question of how do you eat an elephant, right? It's one bite at a time. The man at the top of the mountain didn't just fall there. He had to climb his way up there, right? So that's how infinite banking works, right? It takes some time to get to that point. So this machine works for debt. It works for expenses, for homes, vacation, taxes, everything else. What else can it work for? Okay. Well, I want to give you kind of a big example. This is a very, high level example of how this can really change the numbers over time. I'm talking over time. So remember the doctor, he had a condo, he had a house, and he was paying those back, these rates, $879 per month, 251 months. And the house was 1,221 over 224 months. So if he paid those back as normal, how much would he end up paying to the banks? Around $500,000, $493,000 is what he would pay out to them, and he'd own the house and the condo outright. Now, this is a drastic example, but what if he had bought those homes through his own banking strategy? Now, of course, he'd have to have the funds first. Keep that in mind. You got to capitalize the account first, but this is for just, for high level purposes. Okay. So let's just say that he earned 4%. Now, the dividend rates are higher than that, but let's just be conservative here. And let's just say 4% he's going to earn on the policy. Okay. And let's say he paid himself back. So if he did that inside the policy, he would have 749,000 or 750,000 of wealth inside the policy. So if you do the math on this one, and it's a swing from paying 500 to having 750,000, it's a $1.125 million swing by being your own bank. Now, is that a drastic example? Yes. Are there a lot of ways to do that inside it? And yes. But I just want you to understand that when you understand how the banking world works, becoming your own banker can make a lot of sense, right? So that's a drastic example. Now, if you're saying, well, Brian, how do we do real estate with infinite banking? How do we invest with this? We have a software for that. Craig has built us the software. So we have a software that will map out if you want to do like an investment property or something like that. We will map it out for you to show you the best way to use the policy to maximize that investment. So we do this for you. There's no cost, no fees to it, anything like that. Okay. All right, guys. So now that you know this, I truly believe that everybody who should do this. It's not a fit for everybody though. And I'll tell you that to you, not to your face, but on video or on a phone call. I will tell you that if it's a fit or not. If it's not a fit for you, I will be very honest and I will tell you that. But it definitely, I believe that this concept can change your life, and it can change the way that we view money and the way that we control money. Because if we have that control back into our hands, we can change our lives. We can change the lives of those around us. We can make an impact. And so I have people that are teaching this to their kids, to their grandchildren, that are taking these presentations, by the way, and passing them on to help other people understand what this is and how it can really help you. Because once again, the knowledge of how this works is very powerful. Passing that on to the next generation and the next generation, to me, is invaluable. It's invaluable. Okay. So the next steps, if you guys want to hop on a call with me, that's pretty much it. We hop on a call. I would go through your situation with you. There's nothing to buy, nothing like that. There's no sales pitch, nothing. But yeah, it's brian.banker.com/TBCT. And I'll go ahead and put that into the chat box here along with my email address. Let's see here, where is it at? All right, so there it is right there. All right, so that's my link right there. So when you grab that link, you can schedule a call directly with me, by the way. It's with me, not somebody else, but with me. And then we can go through your situation, see how this can fit, any questions you have, all that kind of stuff. Okay. And then there's my email address. It's brian@chrisnaugle.com. Go ahead and send me an email if you want those resources. And I believe we have the resources. I think if you click the link, I think they might be in there too. I can't remember. I think you have to schedule a call first and then you can access the resources, or just send me an email and I'll just send you the link. Okay. Yeah. So, I mean, Shane said it right there. I mean, this concept changed. And by the way, I've got more slides. We're not done. I got some more examples we're going to go through to explain some more of how this works and some more of the more common questions. But yeah, I mean, he moved on from his W-2 like 5 months ago, using this strategy, and parts of it. But yeah, pretty cool. So, I love that he shares that. All right. So I like this image right here, just because when you start to change your mindset and getting your money working for you versus you working so hard for your money, it becomes easier and easier and easier, by the way. All right. So by the way, we didn't talk about the death benefit. I'm going to talk about that here in just a moment. Okay. The loans, they're your loan, by the way. They don't have to be repaid. Now we're going to tell you that you should repay them, but they don't have to be. You're in control. The internal values inside the policy, that compounding grows tax-free, by the way. Okay. Loans are not taxable either, by the way, because they're loans. The policies, as I said before, they are exempt from judgments and liens in most states. And you can also create tax-free income in retirement through this by the loan provision, okay? Because loans are not taxable. All right, so let's kind of talk through the death benefit really quickly. So in this policy right here, this is a 42-year-old female, so keep that in mind. She's putting in $20,000 for the first 5 years, and then she drops it down to $3,257. Once again, the premium deposits on this go down over time, not up, and they can go down to zero eventually too, by the way, if you want. But look at the death benefit. It starts out at $325,000 at the end of the first year, but she's only put in $20,000. Okay. Now, God forbid we don't want anything to happen, but what if something happens to this person at age 43? That $20,000 turns into $325,000 tax-free and guaranteed. Okay. But look at it year 2, year 3, 4, 5, 6. By year 7, this thing has grown to $500,000 and it'll keep growing for the rest of her life. Okay. So it's an ever increasing generational wealth strategy. Okay. That makes sense? So when you start to understand this and why wealthy families do this, this is one of the reasons why. They can put in, at the end of year 7, they have put in $106,000, and this thing will turn into $500,000 tax-free guaranteed if something happens. But let's fast forward. Let's say this person is 50, she's 43, but what about when she's 85 or 90? Okay. And what if she drops the premium down to zero at year 8? Meaning that she only put in $106,000 into this whole thing, but that $500,000 right there will grow to be probably close to $1 million. That's 10x what she put into it for the next generation. Yeah, it's very, very powerful. Very powerful when you start to look at it. Now, granted, that's not the focus though, because we want to look at the living benefits. How are you using this thing during your living years, right? When you're alive, to further increase and build your wealth. Okay. And faith, yeah. I do not recommend doing this for, if you're, oh, you're talking about the offers. Yeah, that's what I do. I mentor other agents, by the way. I don't know if you knew that, but I actually am I guide other agents. I mentor them. So in this strategy and how to build these things. So if you want to reach out to me, you go, feel free to do that with me. My email right there. Okay. Let's kind of talk through the policy loans for a second here, real quick. Okay. So policy loans, they're guaranteed. Okay, they're a guaranteed loan. There's no credit check. There's no approval. Ask and you shall receive. The loans are private, by the way. It's a private loan. They do not go on your credit report. Okay, which is a big deal. If you're recapturing debt, by the way, that moves the debt off of your credit report and into the policy where it's private. Okay. There's no minimum, maximum, or even required payments on these things. Okay. Because who owns the policy? You do. Who owns the loan? You do, right? So there is no monthly payment or required payment. Now, we do recommend that you do pay it back, of course, because that's how this whole thing works and functions. But if you miss a payment, nothing happens. There's nobody calling you up. Nothing happens. We have people that only pay the interest on their loans and they don't pay them back because that money is working for them in, some other strategy. Okay. Now, another question I get quite a bit is how can I fund my banking strategy? How can I fund my bank? Well, monthly, quarterly, annually, however you want, you can do it however you want. Okay. And you can change that, by the way. You're not locked into one way or the other at the beginning. So how can you fund it? What's the minimum? What's the maximum? Minimum is around 10 times your age per month. Now, I don't typically recommend doing the minimum. If your cash flow dictates that that is what you can do, that's fine. But typically, the more you put into this, the more you're going to get back out of it. So what's the maximum? That's kind of the number we want to focus on to understand your range. It's going to be anywhere from 15 to 25% of your gross income or gross revenue of your business or things like that. So that's the maximum. And that's an annualized number divided by 12 for monthly. So it kind of gives you an idea of the range. But when we talk, I actually will work with you on those numbers so you understand what that means. Yeah. On top of the premium deposit, so you saw this in some of the examples I showed you, you can do it, which is called a dump-in. It's a large amount going into the policy upfront to overfund it. And Shane even mentioned it. He loves those things because when you do those things, the policy cash value is very high, very early. You can borrow within 30 days and you can borrow 90% of that dump-in. So you put in 100,000, borrow 90% of that or 90 grand typically in most cases. So it makes the policies very efficient. And so approximately within 30 days of you starting a policy, you can borrow within 50 to 90%. Typically, it's going to be in higher numbers of that cash value within 30 days. Okay. So you can borrow very quickly and take care of, debt or whatever you want to do with that. So the question I always ask people is, would you put in $1 in order to get $3 out? What do I mean by that? Okay. So because people think, well, I don't have access to 100% day one. Correct. You don't. But there's a cost to doing this, but over time, $1 will get you $3. What do I mean by that? Well, here's an example. So this person's putting in, this is a female age 32. So keep in mind that's who this is on, putting in 10,000 annual premium. And then they're putting in a dump in or a lump sum of $50,000. So in the first year, they put in 60. They have access to $55,535 at the end of that first year. Okay. This is end of year numbers, by the way, maybe slightly less at the beginning. Okay. But look at year two. In year two, this person, she puts in 10,000. At the end of that year, she has access, or it went up by $10,607. Okay, so she's already getting more growth than she's putting in on an annual basis. But now you look at year 11. This person puts in $3,120, and the cash value increased by $10,590. Okay, and that does not even account for the total cash value and what she's using it for over her life. Yeah, the money tree. Yep, Shane. Yeah, money tree year 2. And then this one's a break even year 5. So by year 5, it's actually you have more in it. But keep in mind, this is the engine. Remember in the very beginning of the presentation, I talked about the engine. Like infinite banking is the concept. The engine is the policy. Okay. So we're just talking about the engine. What you use the cash value for outside of the policy and how you put that to work for you, that's where the infinite banking strategy really takes off. Because what if this person is investing in real estate that's providing, cash flow every month, every year, in addition to what you see here on the screen? That's where this thing really can be powerful. Okay. All right. So this is a quote by Warren Buffett. I don't actually like this quote, but I want to show it to you. He says, or he has said this, I guess, if poor people would just do what the rich people do, they wouldn't be poor anymore. I don't quite like that one because it doesn't mean they always have the same kind of resources. But if the poor people had the same knowledge of the rich, they could do things differently with money that the wealthy do. Like that's kind of where my brain goes with it. Because even if you have that knowledge, does not mean you're going to take action on it. Right? You've got to actually move on it. You've got to do something with that knowledge, because knowledge that is inside of you that you don't use doesn't really do anything. But when you put that stuff into action, that's really where you see the big benefits. Okay. All right. So just really quick, I get this question sometimes. Why would I want to work with you, Brian, versus, somebody else or something like that? I've been teaching infinite banking for actually about 10 years now, 9 or 10 years. I've been doing it for quite some time. Thousands of people I've helped do this concept. We here have an entire team that works with you to set up infinite banking. It's not just me and an admin or something like that. No, we're a team about a little over 40 people, and we are the largest producers of infinite banking for some of the insurance companies that we work with. Yeah, yeah. So we definitely just focus on this strategy, but we do it very well. And yes, and I said we are one of the largest producers of infinite banking. We have over 100 clients in underwriting, or I do personally. So I have a lot of clients in underwriting right now that my team is working with. We have probably like 500 to 700 currently in underwriting total. So we know this very well. And then we have a lot of repeat clients. So that's why we have so many. It's because a lot of repeat clients and a lot of referrals. Yeah, because once someone does this, they see how it works. They want to do more of it. We provide ongoing support and services. So we have a full team that works with you. I don't go anywhere. I work with my existing clients, but we have ongoing support, ongoing services that help our clients use infinite banking the right way. That's a big part of what sets us apart is that team, and then showing you and educating you on how to use it. And then there's no cost. So there's no fee you ever pay to us. There's no cost to go through this. We don't charge you anything. You never send any money to me or to my team. So keep that in mind. And if you are wondering how we get paid, I can show you that. Elizabeth, did I miss the response to several requests? Yes. So Elizabeth, if you want to send me an email, I'll send you a quick link to a recording of it. And then this is recorded, but it'll go out on Chris's YouTube channel in about a week. But if you want to watch it later today, just send me an email and I'll send you a recording right away. Okay, so and then my link right there, I'll put it in the chat box just one more time. And so that's the scheduled call directly with me, by the way. There's no obligation. There's nothing to buy. There's no sales pitch, nothing like that. Just if you want to talk through how infinite banking can work for you, just hop on a call with me and we'll go through that. Another question we get quite a bit, and I'm not going to go through it into very much detail because we have videos and videos and videos that can walk through this, is IUL, which is Index Universal Life or Variable Universal Life, infinite banking? No. The answer is a flat no on that one, in our opinion. And we have a lot of reasons why. And we also have very personal experience with IULs and VULs. I have a VUL. It is absolute, I won't use that word, garbage. I'll use garbage. It's an absolute garbage. I got a VUL like 15 years ago for infinite banking, and it was absolutely horrible. 10 years later, 15 years later, I still have significantly less cash value in that policy than I have put into it. It is garbage. It has not performed well at all. I do not recommend it. IULs and term insurance, they pay some of the highest commissions, by the way, so keep that in mind. They do pay high commission. We take about a 70% cut in commission to do infinite banking. So we give so that you can get more out of the policy. So that's why this works. If you go to a life insurance person and say, hey, can you set me up with cash value life insurance? And they say, yes, I can. Oh, but by the way, you can't borrow from it, or there's no cash value in the first 3 to 4 years. Run away. They're not doing infinite banking. They're doing a high commission life insurance policy. So run away. Just be aware of that. And then our team, we only do infinite banking. But we have personal experience with IULs and those kind of things. We do not recommend them. We have personal experience with them. And we've actually even seen the performance of those things over time. And you can actually lose cash value. You can go negative in a given year. And we can actually even show that and prove that. But yeah, so we prefer to have things that actually go up with time with guarantees. And once again, I like guarantees. All right. So 2 things in life will happen to us. Okay. 1, we are going to live. We're going to live. We know that. And we also know that we are going to die. So are we better off while we're alive with infinite banking? Yes. Are we better off with it at the end of life? Yes. I showed you the death benefit, the generational wealth. So guys, if you have any last minute questions, we're getting close to the end here. Any questions, go ahead and put those in the chat box or the Q&A box, and then I'll spend some time on those here in just a moment. But I want to kind of share with you kind of my story about how I came across infinite banking. So I told you, right? So when I first came across this, I was like, you know what? I'm the guy on the left. That's who I was. I was like, you know what? I don't need any help to do this. So I went and kind of found a guy to do this for me. I didn't have any support on it. I had nobody tell me how to use it. And it sucked. It did not work out well for me. I lost probably, I want to say 100,000 plus potential wealth by not knowing how to do this the right way with an inferior product, by the way, too. And it did not turn out well. And so group 2 is who I always want to be in. It's, I want to be part of a team. I want to be part of a group or have mentors that really can show me how to do something. Because if I'm just coming into this, just learning about this, I want to do it the best way possible. And I want the best people to do it for me. I believe that is our team. I'm here, of course. But if you're starting to get kind of interested in infinite banking and this makes sense to you, take action. Just hop on a quick call, because that's pretty much the obligation right there. Just hop on a quick call and let's see how it can be a fit for you. I can provide you with more resources and more education, that kind of stuff. So that's pretty much my, recommendation, call to action is just schedule a call with myself or anybody that does infinite banking and just see what it can do for you. See how it can work for you. Get some clarity on the concept, get some more information on it. Okay. Don't be me, by the way, and go it alone, right? By all means, do your own research and stuff like that. But at the end of the day, being part of that group that does take action and learn more about it is really where it's at. So that's pretty much it. Let's hop on a call. Let's solve your problems. That's really what infinite banking can do for you, is solve problems, help you overcome challenges or struggles. And, and let's just see if it's a fit for you. So, and I like to end on this quote right here. It's the one I did in the very beginning, the Will Rogers quote, but it says, once again, the problem in America isn't so much what people don't know. It's what they think they know that just ain't so. All right, guys, any questions you got for me so far? That's the last of the slides right there, but any questions you have for me? Yeah, Shane. Yeah, Shane, he has a pretty cool story. He has 2 policies and he plans to get a 3rd one this year. And he's worked with our support team, to make sure that he's using the policies. Yeah. So, I mean, if you have any interest at all, that's what I recommend, is just schedule a call and let's kind of go through your questions, your situation, how this can work for you, all that kind of stuff. Yeah. All right. So if there's no other questions, I'll let you get back to it. Any last minute questions? Yep. Jose, yep, for sure, man. For sure. Yeah, Jeanette, absolutely. Hopefully I clarified some things about it, all that kind of stuff. But yeah, if you guys want those resources, just send me an email, brian@chrisnaugle.com. It's up there in the chat box. And then, yeah, Dan, yeah, for sure. Yeah, appreciate it, Patrick. And then if you want to schedule a call, just grab that link up there, and then we can hop on a quick call. But yeah, I'll send you the resources. I think I already saw some emails come in from that, so I'll get those over to you here ASAP. But all right, everybody. Hopefully I talk to some of you here soon on the, oh, hey, Frank, there you go. Hopefully I talk to some of you here soon on a phone call or video call. And with that, I'll see you in the next call. Or by the way, ask me anything. So I think somebody mentioned that. I think that was you, Shane. On Wednesdays at 4:30 Eastern, we do a live stream with myself and Chris and the other mentors here on our team on his YouTube channel. So go to Chris Naugle YouTube channel, subscribe there, and then you can watch us live stream and then ask questions live of our entire team on infinite banking and money, etc., all that kind of stuff. It's something we do every single week. So it's a lot of fun. So, and I know Shane, you're on there a lot too as well. All right, guys. Great talking to all you guys. Talk soon.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.